Ayon Mukhopadhyay of IIFL Institutional Equities joins us right now on the show. Ayon, good having you. Thanks much for taking the time out. Perched from where you are, when you look at the Indian landscape with a bird's eye view of sorts, and more importantly, the news flow from the government side, does it look like a base is getting formed for a move higher, led predominantly by moves that might improve the sentiment around Indian equities?
Hi, good afternoon. Well, I normally speak with the FIIs which are invested in India, and the concerns around India are mainly regarding what is happening on the growth sides and also on the fiscal side. So these are the two large concerns that FIIs are mainly facing in India right now. Currently on the growth side, as we all know, where the concerns here is mainly whether it's a cyclical concern that we are facing right now, or is it more structural, and what are the steps needed to get out of this malaise of growth that has been well documented and talked about right now, and whether it will be 2 or 3 quarters before we get out of this, and what are the steps that the government is taking. But I think of late, the other concern that has really creeped on, and we saw with the GST collection numbers that came out also, is on the fiscal side, what is the government doing? And I think the RBI also in its pause that it did last week, I think it hinted that its concerns were more on the fiscal side, and that was doing it. So I think these are the main concerns, and that would hinder, from an FII point of view, putting in more money into the stock market. Of course, we know that the market is being buoyed or has been buoyed for the last few years with very, very strong domestic flows. The FII flows also this year has been quite strong. In fact, in the last 2 months or so, it has been quite strong, but we will need to look forward and see whether these robust flows can continue given the two concerns that I spoke about.
Ayon, when you speak to your set of clients out there, are people right now shying away from putting more money to work despite, and the question is, a lot of people out here talk about how foreigners might come back because of, one, the corporate tax cut and therefore the resultant improvement in earnings, and if indeed personal taxes cut, that might also lead to a sentiment improver. However, it doesn't address the two main concerns that you spoke about, which is the lack of growth, at least in the near term, as well as the fisc situation. If anything, the cutting of taxes would only exacerbate the stress around the fisc. Yes.
See, the thing with the tax cut is that the tax cut was mainly done to spur capex, and a few weeks back we had a conference in London where he had a lot of companies here speaking. And we did not get any confidence from the companies here presenting, where they actually came up with saying that they have the confidence here to invest in capex. So the government's plan here to revive growth is that they would need a capex-led revival to come in. But from the corporate point of view, what they are trying to say is that we do not see growth coming in to do the investment. Of course, when you have this tax cut happening, it would not lead to immediate growth. Of course, the analysts have built in maybe the earnings upgrades coming a year or 2 years down the line, and that's why the markets are forward looking, and that's why we are still very, very close to all-time highs from a valuation point of view, or from the market point of view, which again is a concern for the FII investors, that the market is too forward looking, and the growth, or rather the valuations, seem to factor in most of the positives.
So, Ayon, good afternoon. Is there any pocket of interest right now from a sectoral standpoint that FIIs feel could be the next growth churner for them? I mean, at this point in time, the FIs are not clearly overweight on India in terms of even the weightage in the MSCI. They're just about at about 8.5%, 9%. What's the average there in terms of the weightage of India in the MSCI index? So do you feel that there's more money left on the side which could actually come our way, or do you feel they're done with holding on to the average weightage that there is?
Well, I'll tackle this question in two parts. First is we are seeing a bit of movement of money, or rather, the emerging market as an asset class is facing a bit of a challenges as such. The growth in the whole emerging market basket as such has come down, and lot of questions are going on whether this is as such a whole structural change that is happening in the emerging market basket as such or not. So the growth now for 10 years now, the growth in the emerging market has disappointed as such, and the US markets have really buoyed. And in a scenario where going forward we do not really see the dollar weakening, we have also seen the renewed expansion of the balance sheet of the Fed. In that kind of scenario, how much of money will actually start flowing into emerging market is a concern. And there, when you have that scenario, how much of allocation will actually come in the basket towards India? And then in India itself, the valuations in India as compared to other emerging market is eye-watering, as I've told you before. And another very interesting figure is that in India, about 10 years back, the ROE of the market was almost similar to other emerging markets. But now today, it was about a 10% premium to other emerging markets. But today the ROEs of India is at par with other emerging markets, though the valuation at a 60% premium. So keeping these in mind, how much of money allocation will per se come into India is questionable. But the other point to look at it is, when I speak with investors here, they look at India more as a basket of 30 to 40 very, very good quality companies, and not as such as the market as per se. So that's why we see companies with reasonable growth, very, very high governance, and decent balance sheets continuing to get very, very high multiples and flows of money, and they will continue to be the winners. And this is where I think the money flow will continue to come in the next few quarters, and these companies, even though they are at considerable valuations, they will continue to go. And that is why we have seen the insurance sector, for example, just picking out one sector. This sector has done incredibly well in the last 1 year or so. But I think this sector will continue to do well simply because the penetration levels are very low. These are very, very well managed companies, and still the allocation to these companies are low.
So Ayon, are you saying that your clients or the FIs who you talk to are willing to park more money into the India insurance space even after the valuation leg up that we've seen most of these stocks get?
Well, I'm not saying that they are willing to park money, but what I'm trying to say is that this is a sector that is still garnering interest even after the run up that we have seen in these insurance names, because of, again, as the reasons I mentioned, that this is a sector which is still quite underpenetrated. The governance of these companies are quite high, and people see there is an opportunity still there on a long-term level.
Have any large institutional investors expressed confidence about buying into the non-HDFC Bank, non-Kotak Bank stories? Because that's the other rung of stocks which are likely to, or which are seeing some business traction, valuations are attractive, and the FI limits are not exhausted as yet.
Well, investors are always looking at ideas. As I said, they're always looking at bottom-up ideas, and they're always looking at stories, where investments can happen. But I think, as I said, the concerns are, especially in banks, may come to banks here. I think the concerns here in banks is when they look at the next rung of banks, when they look at the new, or they look at the private sector, smaller private sector banks or PSU banks. I think the question mark remains is that, are they confident that there won't be a howler coming forward within the next results? They will not see they'll not see a business group coming up there, which will wipe out certain percentage, or they'll have to make a huge provision in that. So I think till that confidence is not there, I think they are not willing to, put a huge amount of money into that. And also in select NBFCs, I think NBFCs, apart from the usual name, I think has been painted with the same brush, which I think some foreigners are now waking up and understanding it has been a bit unfair. In that way, I think selectively, if some measures, and I think a lot of FIIs have also told that they have been quite surprised that the government has not taken corrective measures in the NBFC space. So if reforms happen in the NBFC space, I think we'll be able to segregate good NBFCs from bad NBFCs, and certain NBFCs could see some money coming in.
Okay. The other aspect, Ayon, would be whether or not there's any value left in the more popular names up until now, which have been leading this rally up. I mean, you wonder how much headroom there is. And like the popular ones like an HDFC or HDFC Bank, we've seen Bajaj Finance coming off a little bit from its peak, Reliance Industries still holding fort. So, you know, these larger, more popular names, how much more legroom do they have?
Difficult to say how much legroom they have. They're obviously not value picks anymore. So I guess this would be more of a compounding stories going forward. And investors, like as you say, if they want to be in India and try to be, I won't use the word defensive, but you know, try to be in as a proxy to India, they would try to hold on to these names. So that would be the way of investing. And yes, they would try to keep them. But these are definitely not value picks anymore.
All right, Ayon, we'll leave it at that. Thank you so very much for joining us this afternoon and sharing your thoughts with us on the platform.